What happened to the bottom pickers and the dip buyers here yesterday? So they faked me out on that one. When these markets, they are getting very interesting. So good morning. It's Wednesday, April 8th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So what I'm talking about here, and I'll give you yesterday's recap because it's very important. It was one of the most two-sided trading days that Wall Street has ever seen. On Tuesday after the markets opened, the Nasdaq Composite was up about 4.6%. The gain looked like a bottom, capitulation, a rejection of the Sunday, Monday sell-off, and that the lows could potentially be in place. Now, I'm not a proctologist, so picking bottoms is generally not my area of expertise. Well, peaking at 9:30 a.m., the Nasdaq began to fall, and by 1:30 p.m., the Nasdaq was in negative territory and closing down about 2.2%. It was one of the largest blown gains in the Nasdaq since 1982, and if you're speculating and you gave up some of your capital, well, it was an outlier on the charts in the dot plot. So for the S&P 500, it was the first time ever that it had been up 4% or more on the day and then closed down 1%, and that goes back as far as my CQG goes, so back into the early 80s. So everyone's really watching two things. Is President Trump going to cut deals on tariffs in China specifically, where they're facing a combined 104% tariff? And then China, they are holding firm on its threat of a 34% retaliatory tariff. Now, in the overnight session, we did see China come out and announce some stimulus measures for their economy specifically, and they really kind of take down a bit of this discussion and these talks about the tariffs. So it seems like it's a high stakes game of chicken right here, but I understand why he's doing it and why these countries are all doing it. So what we know is that Trump is really open to deal making with dozens of nations, including South Korea and Japan, and that's where the rally started here yesterday. And they're looking to reduce or eliminate some of these higher tariffs. And he signaled that many different countries out here are offering concessions beyond trade and the tariffs. So today, we're going to see some other key events. We will see the FOMC. They're going to release the minutes from the mid-March meeting. Remember, at the mid-March meeting, the central bank left the Fed funds rate unchanged at 4.25% to 4.5%. We're really going to want to see if they mentioned anywhere about these tariffs, about inflation and things like that. So they are really signaling that they want to reverse some of this damage that's done here with regards to the trade war and some potential effects, including higher inflation, slower growth. So we're really going to want to see if there's any kind of dialogue about the wait and see approach that they're taking on interest rates. Now, CPI, that'll also be released, but is it really relevant at this point in time? We've seen CPI start to decline, rise back up, and I think that really the focus, again, is going to be gripping on any kind of headlines and any kind of tweets or comments coming out of Truth Social with regards to these tariffs. Now, check it out on the precious metals, because we do have a substantial move in the gold market, up about 2.3%. You got silver up about 1.92%, but silver really feels like it's lagging right now at about 101 to 1 on the gold silver ratio. Sunday night, we were at about 105, 106 to 1 when I was watching it. Might have gotten a little bit higher than their intraday. But the key is on gold, as you look at the overnight session low, 29.8330, and it's that pocket support around 29.85 down to 29.75 that we outlined in the chart pack. If you haven't checked that out, you can register in the link below in the description, and we'll email you out the latest one. I generally update it about every day and a half and email that out as the market starts to probe different areas of support and resistance. So looking at the overnight price action, again, you've got gold up $70. 30.7140 was the high of the session. The key resistance, I think, on the gold is just above this 30.77. You look at the silver market, it really consolidated around that support that we outlined. Now, Sunday, obviously, panic liquidation going on, forced liquidation, and things like that. Lots of margin calls and lots of capitulation going on in that market, with the washout selling off with a 27 handle before stabilizing and consolidating right around a key level of support about 29.25 down to 29.24. If you look back in December, that's where the double bottom was there. You go back in the previous months, that's where resistance was. Old resistance, we break through it, becomes new support, and I think that's your critical support level on the silver market right now. Many people are using any kind of extended movement ups to start to roll out because they're looking at silver in the 29s when you go out to July and September and beyond as good value for the long term, with the potential for another movement up in the silver market if we do get stabilization in the tariffs and the tariff talk and things like that. So looking at gold, up $71 right now. Now, what have we been discussing over the last few videos is that it's not necessarily when or why we're seeing gold prices do what they do. It's when gold prices are doing what they do, and that's very important. So you look at Chinese gold purchases, and this is why we're seeing these overnight highs, is that Chinese investors put a record 7.6 billion yuan into gold-backed exchange-traded funds last week. They are continuing to do so based upon when this price action is occurring. Now, the majority of the recent inflows have come from retail investors, with the year-to-date additions already 4/5 of last year's total. So they're really piling into these markets. And gold up about 13% this year, not taking into account the movement that we're seeing right here. It seems that people are continuing to look for safety in different risk assets. We saw that occur with the treasury market, where I believe there was some outflow in the gold market, where people were trying to take advantage of some of these higher interest rates and some of these higher yields, just parking cash until we get through this volatile and this rough season that we're seeing right now. So why are we seeing the sell-off happen during the day session in the US markets? Well, I believe that it's people frustrated with gold's recent performance, and the late to the party buyers here are kind of selling and they're rotating back into US equities as they don't want to miss any potential kind of bottoming action in the US equity markets. So let's look at the ETF flows from the previous trading session in gold and silver. So the exchange traded funds, they did cut 193 ounces of gold from their holdings in the last trading session. Again, US investors taking those positions off, trying to deploy into the US equity markets. Those ETF flows in a silver market, well, with the market dipping below $30, looking at its longer term value, they added 789,000 ounces of silver to their holdings in the last trading session. So the summary of the ETF performance holdings year to date, we want to look at with gold up 6%, kind of leveling in that area, silver up 0.5%. So we're going to want to keep an eye on that gold silver ratio. If it gets a little bit stretched a bit too high again, I think we could see one of these days where silver really starts to lift up and push higher. We're going to want to watch an eye on that copper market, 422, high of the overnight session, 426, low 403, holding that $4 range, up about 185. Platinum, little bit of love here, getting a little bit of attention when it gets near that 900 level. It defended it in the overnight session. You got palladium down at 890 here, and palladium just kind of rolled over and died on us. The bid offers are quite wide in the palladium market. The market tends to make erratic moves, and it really frustrates investors. So it's just not getting the attention that these other metals and these other markets are at. So we're going to want to see copper futures continue to rise. We want to see China come out, support their economy. We want to see the worst behind us on the tariff discussion with regards to China, and some deal making start to take place. And I think if gold can hold these elevated levels, copper prices can move up. That's where we see silver really move, the 80, the $1.20 move to the upside. Now, I do expect when it gets closer to 34 to 35 again, and I believe that it'll get there, that they're probably going to start to see a little bit of liquidation go on again, and it's going to have a tough time breaching that 35 level here at the moment. And that's just my opinion, and I'm entitled to it here. So check it on the outside markets here. Crude oil prices fallen to a 4-year low, down $2.40 right now. The May contract at 57.16. That's a 4% decline. The short ETF on the crude oil market saw one of its largest outflows ever. So many of the people that were playing the drill baby drill, prices selling off, I think that they booked some of those gains here yesterday, and that's just my suspicion. So the trade war, OPEC Plus's decision to loosen supply curbs has really kind of ease some of the markets as far as that supply demand imbalance, with supplies exceeding the demand, causing this price drop here. So the implementation of the new tariffs, the retaliatory measures, kind of further decreased that demand and drove prices down. I keep seeing a lot of things about Delta in the background, withdrawing their forward guidance and things like that. If you're Delta, why are you not hedging and locking in all your fuel costs and your needs through crude oil with prices down at 4-year lows? It just doesn't make sense to me here as far as what they're doing. And I really think that, there's quite a bit of resiliency in the U.S. markets here and in the economy. And a lot of the recession discussion is a bit overblown. That's just my opinion again. So you guys got any questions? You didn't get the chart pack? Go down into the description, fill out the form here. We'll send that out to you. You also get some of our internal research that we send out here. We give you a call. We'll see if you need anything over here. We love to work with you. We love to hear your stories here with regards to the metals markets. Meet a ton of interesting people, everything from mining operations, coin dealers, refiners, smelters, things like that. People that run mines in foreign countries. It's mind-blowing the amount of people that you meet working in the futures and commodities markets. But remember, futures and option trading, it does involve risk of loss, may not be suitable to all investors. And who we betting on in the Masters here? So got the Masters hat going on. Be rocking that here today, tuning into that, checking that out. So kind of peaceful to watch golf here on TV while you're trading here. Kind of has two different elements. You got the recklessness of the trading, and you got people really concentrating where every shot counts here in golf and every trade counts in your trading account. So again, got any questions, give us a call. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading, go get them.